Good morning, Futex traders, and welcome to all our Futex Live members on the outside, and welcome to this price action replay session. What we're going to talk about today is called a yield level V reversal. Now, you do see this only in the bond markets, across major developed bond markets, whether it's the US, European, Italian. This is a fantastic play. The wonderful thing about this play is that you pick it up on a yield chart, so it's not very obvious to a lot of retail traders, but it is, the bigger institutional players, the banks, the hedge funds, they pay attention to these yield levels, and that's why we get a very specific price action called the V reversal. And when I go over the actual price action, I'm going to show you what it looks like. I'm going to show you what the paper looks like as it comes into the market, and then more importantly, I'm going to show you how you can make money out of it. So straight into it. The example we're going to use is from the 12th of May, so last week, in the German Bund, so that's the German 10-year Bund. And so what I'm going to briefly do is talk about the setup. Now, how it works is, to annotate this, I'm actually going to show you the chart of what occurred. Now, the first thing we have to do is we have to go and establish what are key yield levels in a bond market, whether it's the US or the German. We have to find those key levels. So the first one we're looking at, this is a daily chart, a daily yield chart of the German Bund. Now note, yield and price are inverse when it comes to the to the bond market. So you would most likely be trading off a price chart, whereas this is a yield chart. So we can see at that point, this is the candle I'm looking at, this big sort of engulfing bullish candle, and what we can see is that the level we had pinpointed was this 10 basis points level. And the reason we had pinpointed that was because, one, yes, okay, there's a lot of talk and chatter now about a potential inverse head and shoulders in yield. Two, we were sort of paying close attention to the 10 basis point because of the swing rebound that we had back in early March of 2016. So this is the reason we're paying attention to it, so we had pointed out that 10 basis points as a potential point to watch out for. Also note, it was quite key because we had seen an inside day break, so we'd had these little inside candles, we had the extension. So, coupled with all three of these factors, that is the reason we were paying close attention to this 10 basis point yield. Now, what I will say about the setup is it doesn't occur very often. The next potential yield setup I'd be looking for is if we got back up to this 28, 29 basis points, then maybe I'd be looking for a similar kind of setup. But these trades don't occur very often, but when they do, they're particularly powerful. So that's the basic trade. What we're looking for is a key yield level, but more important is we're looking for a very exact specific piece of price action, which is what we call a V reversal. So what I'm going to do is I'm going to show you what a V reversal is and what it looks like, and more importantly, how you can make money. So in essence, this is what we call an inverse V reversal. So what you can see is it looks like an inverse of the letter V, whereas a V reversal would just look like a V. So because prices are higher, obviously we get the inverse V reversal. Now, the basic, what you're looking for here is symmetry. So you're looking for an equal and opposite. And what I mean by that is that as quickly as we come up, in other words, as symmetrical as prices have come up, they've then come down in the same fashion. So we get that very smooth one directional flow and then one directional reversal flow. Now, it's important to see this exact kind of flow because as I speak a little bit later about the setup, you're going to see there are implications for these V reversals. In other words, when we get a V reversal, the probability of a continuation in the direction of the reversal is very, very high. So it's important that you see this kind of sort of V-shaped type symmetry. So that's the first thing. The important thing to understand and how you get on this trade is not to panic. Remember last week we spoke and I showed you how in the straight, the open line, straight line open drive, I spoke to you about how if you miss the first part, not a problem, there's always a second opportunity. It's exactly the same here. The trade is not necessarily always getting on here, okay? I will show you the price action, you will see it's very obvious. But the real bread and butter is identifying this lower accumulation, and I'll explain why that occurs, the lower accumulation and then the continuation. In other words, this is our bread and butter, guys. This is where we focus and this is where we get big and make money as day traders. So let's get into the setup a little bit further and discuss one or two other things. So in terms of execution, I'm going to show you a way you would execute off the price action, but then more importantly, I'm going to show you how you would execute in the bread and butter phase. we're going to then quickly, or we'll move over to the ladder in a second and actually have a look at what it looks like in terms of price response, and then what next, okay? What does this mean in terms of, going forward for this price action play? So let's get straight into it and talk about it. Now note, obviously, the price we're looking for, the price that paper comes in, is around this 49s. Now, straight away your eyes should be sort of drawn to this 1,000 lot, and you should be almost saying to yourself, well, hang on a sec, there was a real 1,000 lot in the market already offering at that paper. So a very interesting clue that was given to us even before the paper came in. So note, okay, obviously you can see that this trader is trying to position. So the first thing I'm going to say to you guys is do not preempt, okay? That's the biggest mistake I think I made early in my career, is I would preempt these yield levels, all right? What I will say to you is wait for the price action, wait for the price response, expect that price response. When you see that price response, bang, hit it, okay? Remember, and I'll teach this, in the course that we developed in this exciting course, but learning to trade is not necessarily about learning about opportunity, but more about learning to avoid certain pitfalls. Now, note, yes, okay, I'm hoping 10 basis points, will work, and I'm hoping 10 basis points will hold the market and paper will come in, right? But don't forget, guys, a level is only as good if actually someone's going to step in the way and sell it. This market could go another 100 ticks in a straight line now if nobody sells it, and that is probably the single fundamental most important thing about trading. Levels mean nothing unless there is someone with influence that can actually hold those levels. So let's move on to this play and let's see how it works out. Now note, 44's had a real 1,000 lot, bang. Straight away we've got to say, a buyer stepped in, he's lifted 4, he's lifted 5, 6 and 7, 8 at market. So we're getting this very aggressive price action straight away. Someone's come into the market and they're lifting sort of real offers off the market. Note, okay, we see a little bit of sell side action there. We can see someone come in, reload the 7, reload the 6, and at the same time offer 6 and 5. So we can see a seller come into the market. He has tried to sell the market back down. And note, obviously, we have got a real 1,000 lot at the 48. So let's watch this again as it goes bid a second time. Again, note, we have already seen a seller initiate. So someone did sell 3 clips there, 7, 6 and 5. However, the market's gone straight back bid again. So this is not the kind of price action we want to see in a V reversal. What we want to see in a V reversal is no one buying it and only people selling and reloading. So we only want to see a seller sell, 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 reload, 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 sell, 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 reload, 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 reload. And the important thing, guys, and this is the key to the setup, and I'll show this to you. When the seller comes in, we do not want to see, anyone buying, but we also want to see the seller constantly going offered, okay? Why? Because this seller, these paper traders, they've got 10, 20, 30,000 contracts to do. So they are going to use the liquidity for the next couple of hours, all right? So that's the important thing to understand, is once they come in, they're going to keep it going with the market. They're not going to stop, until they've got those orders filled. So as you can see, we've come up to these 49s, we've reloaded the 8s, we've had someone hit into the 7s, okay? Nothing majorly aggressive, but again, note, so 7s is gone, and instantly the seller hits his 46s, all right? Note now, the 6s reload, okay? So we can see a reload on the 6s, we can see someone buying it still, but equally now we can see a seller stepping into the market and reloading 6s. Look at the reload there. Reload, reload. At the same time he sells the 5s. Again, a buyer is buying 5s, but the seller says, I'll take the 5s and I'll sell the 4s. Again, a reload 5. Now the seller's going, all right, I will keep taking the buyer who's buying the 4s and I'm going to start selling the 3s. Okay, and we're going to see this very direct price action now where the seller keeps reloading the offer and keeps selling into the bids. Okay, and this is going to continue. We're going to watch this for another couple of seconds and then we're going to move on to the meat of it. Alright, so again, note, a buyer steps in, lifts the 4s, but what does the seller do? The seller says, thank you, I'll take those and I'm going to offer you some more. You can have more at 4s. Instantly the seller starts selling into the 3s. Right? Again, note, the buyer buys the 4s and the seller's reloading the 4s. Again, the buyer lifts the 5s and the seller continues to reload the 4 and the 5. So the seller's not letting go of this. The seller's happy to let someone buy it. He wants someone to buy it. That way he can get filled from the seller. Okay, sorry, filled from the buyer. That way the seller's now getting his fill. He's getting it full. He's full at prices that he wants to get filled at, and at the same time he's actually managing to execute some good order here in the market. So note now this goes on. So we're going to see this sort of price action for the next couple of minutes, but slowly but surely we're going to start to see the market drift lower and lower and lower. And I'm just going to move this a little bit forward. so we can get into our accumulation phase. Now, the key with a V reversal, guys, listen very carefully, is once you get this equal and opposite price action, so we went from 33s to 49s and we've come all the way back down. Once you get this, let's get that chart up. Once you get that key reversal, in other words, you get the up move, you then get the reversal. The market, a traditional V reversal or an inverse V reversal, is going to settle. It's going to form a distribution, which is this area here between 26s and 33s. Note now, guys, this is a 5-minute chart. So note how you had almost 35 minutes of accumulation before the continuation. So the key is to pick up on this reversal. Make sure you don't get sort of too caught up, too excited in this area. Try and build a position at higher prices, and then most importantly, add the rest of that position on the breakdown of that lower bound of the distribution. Because once that breaks down, your stop is above that higher end distribution and you're looking for the continuation pattern. Guys, it's a very high risk reward metric trade. You don't see them very often. I think back in 2012, when the bonds were still much higher in terms of yield, we used to get these quite often, maybe once a month, once every 2 months. But now you maybe see 3 or 4 of these a year, and that's why it's a unique better price action, and more importantly, it's unique the way it looks on a chart. So that's the key chart, that's the key premise of the trade. Let's move this down and just fast forward the price action down to these 25s and look what it looks like when we actually take that distribution out. So note, the market bounces between 25s and 36s, 37s, and it just stays stuck in this area for a good couple of minutes. Now, note the frustration here. You can see the seller's gone short here, and he's wanting to get short because of the reversal, but effectively he's he's getting short at the lower bound of it. Remember what I said to you, you want to sell the top end of the distribution, so 34s, 35s, somewhere around there, and you want to look to add below those 25. So let's fast forward this to the 25s and see what the breakdown looks when we actually get below the 25s. Okay, so let's go up a little bit. Note, we're sitting on 26s. And let's see if we can know. Now remember, bear in mind, for the last 35-40 minutes, as we're talking about this distribution, okay, the price action in here would have been very dull, very two-way, a lot of buyers and sellers participating. But what occurs once we actually break below those 25? So let's see how the price action responds when we get below 25s. So note, 25s is sitting. We can see a seller. Note where the mouse is, guys. Very important. This is a good example of what you should be doing as a trader. If you're looking to execute and rapidly hit the market, you've got to be hovering in the right area to take advantage if there's going to be a potential move. So let's move this on a little bit. Okay, so note. So 25s goes off it. Note, there was a 400 lot there, and we saw someone sell 370. So we saw a seller come into the 25s, he sold the full 25, we then saw the seller go straight into the 24s. Now let's see how the buying responds. In other words, bear in mind, previously we did see a lot of buying. Let's see if we pick up on any buying. So 25 goes, 24 goes, not a single, a little bit of a buyer there, but instantly the seller reloads. Note what the seller does, instantly hits the 23s. Okay, so note the seller now, he's looking for a buyer, buyer's gone, so what's the seller going to do? Right? He's either going to hope that someone buys it, as someone just did there. We saw a little bit of buy clip at 23s. But the minute that buying runs out, okay, what does the seller do? He goes to the market. So he continues to sell or finish out that sell side order that he's been looking for. So let's just run this through for a few more seconds and then look, see what we can pick up in terms of price action. So note, again, no real buying, but the seller's happy to take any kind of potential buying that does come up. But note, guys, the seller is not allowing prices to go bid up back above that key breakdown point of 25s. Instantly, seller hits to the 2s. Seller becomes a little bit more aggressive now. He sells 700 lots of the 2s. Okay, let's fast forward this on and have a look. So 2s go, 1s go, straight away into the 20s. And we can see that slowly but surely the market unwinds and we retest down at the low of the day. So that's where I'm going to finish the price action actual ladder. Let's just recap. Let's have a look at that chart and talk about the what next. Where is the opportunity going forward with this trade setup? So bear in mind, let's just recap. We spoke about the, oh, my chart's gone missing. Okay, so we spoke about this being the key area. We spoke about entering at the top of this distribution, somewhere around these 33s, looking to add at the 26s and 25s for a move or for a continuation of this theme. Now, in terms of target, a lot of people ask this. What I would typically look for is I would look for the length of this, so from 49s to 26s. I would look for that 23 tick move to the downside. So I would have been targeting somewhere around 03s. And what we can see is the market actually respected that perfectly the first time. So that's the 03s there. It didn't quite reach it, but it did give it a little bit of a bounce before continuation. All right, now what I want to talk about is the what next. What does a V reversal mean? Well, guys, it's very important, and you can see this if I bring that yield chart up, is that a V reversal signifies paper, institutional flow entering the market. Now, because of that reason, it means that there are longer term implications, or longer term players have re-entered the market and they said, well, you know, enough is enough, this area we're going to defend. So the first thing you have to know is if that goes, if that 10 basis points goes, one, we're going to get a positional play. So we're going to get a very quick breakdown as the shorts in terms of price need to buy out of those shorts, okay? In terms of, you know, the implications on the other side of the market, well, if the market agrees that the trend is now turned, well, then we should start to see this market gradually rise and head back up towards this 29 basis points. All right, guys, I'm going to leave it there. Just to sum up, that's a V reversal, a yield level play. We get them a couple of times a year, only in the bond market. It's a very special play. It was shown to me actually by my mentor. You know, it's fantastic. You have to have a mentor, guys. If you haven't got one, you know, try and find one. Someone who you trust, someone who can sort of give you advice that will actually aid your trading. You know, if you want any more information, or if you like the video you just seen, you know, please log on to www.tradingwithedge.futexlive.com. We've got a fantastic new course coming where you'll have your very own mentor. So go have a look at that. If you have any questions, feel free to tweet me. Otherwise, good luck for the rest of the day, and we'll catch up again next week.